Hi, I'm Sameer Jain at Active Allocator. I've been tracking a fascinating company, Saudi Aramco. So Aramco post IPO at $1.7 trillion will become the world's most valuable company. The final price for its shares will be announced on December 5, but that's what folks are expecting. And they're going to sell a 1.5% stake in the company, around 3 billion shares, and raise $25 billion. So this is the beginning, and I guess they are testing the waters. Aramco manages Saudi's oil reserves, and it has a government mandate to optimize production and maximize the long-term value of the kingdom's assets. Oil is Saudi Arabia's biggest asset. So right now they are in the bidding and book building period for institutional subscribers. This is, I think, till 4th of December. And do keep in mind, its shares are not registered or offered in the United States, Australia, Canada, Japan, and a few other countries. So foreign institutional investors will be limited to around 1,500 qualified investors that are now allowed to trade on the Saudi Stock Exchange. I just found out that the retail offering period is now open and it's on for the next 10 days for Saudi and GCC citizens. Folks say that trading in its shares is expected to commence mid-December, but I'm not too sure about that. What I am very sure is when Aramco starts trading, it will be around 10% in the Saudi local market index, and Saudi Arabia's weight in the emerging markets index will naturally proportionately increase. So keep an eye out for that. I was very impressed with Aramco's vision to be, and it already is, the world's preeminent integrated energy and here's the interesting piece, chemicals company that's operating in a safe, sustainable and reliable manner. So it's going to provide its shareholders with resilient value creation through crude oil price cycles by maintaining its position in oil and gas production, by capturing additional value across the hydrocarbon value chain, by profitably growing its portfolio of companies. Its strategy is to reinforce its competitive position across its upstream and its downstream operations. And by the looks of it, it has everything going for it to maintain its position as the world's #1 crude oil producer. And more interestingly, the world's leading lowest cost producer, which is a double whammy. It has been balancing production between maturing areas and newer production sources. So they're spending a lot on maintenance by tapping into new reservoirs whenever required to optimize the depletion rate of its oil fields. A good thing. It is, of course, the world's largest integrated oil and gas company, but the numbers are going to astound you. It produces around 13 million barrels a day. So one in every 8 barrels of crude oil produced globally comes from Aramco. And its liquid reserves are approximately 5 times larger than the combined proven reserves of the 5 major international oil companies, around 234 trillion cubic feet of natural gas, and it also produces around 9 billion cubic feet of natural gas, 1 billion cubic feet per day of ethane. Huge numbers. And since it's a national company, the Saudi government determines the maximum level of crude oil production. It's been around 13 million barrels per day. And Saudi, as we know, has had a big stabilizing role to play in oil prices. So Aramco has some spare capacity that it varies in response to changes in global crude oil supply and demand. I didn't know this, but some statistics jump up. It's also the world's fourth largest integrated refiner, and it refines around 5 million barrels per day. So the upstream position is very, very preeminent, and now it is focused on a continued strategic integration of its downstream operations, upstream and downstream. Looking at the financials, last year it generated $121 billion in net cash from largely from operating activities and 86 billion of free cash flow. Huge numbers, very little leverage, less than 9%. And I was trying to figure out why is it the world's lowest cost producer, and it seems that it is because of the unique nature of the kingdom of Saudi Arabia's geological formations. It has very favorable onshore and shallow offshore water. There are lots of synergies that come from the company's use of its very large infrastructure, from its logistic networks, its very low depletion rate, and immensely scaled application of technology. These are things that are easy to miss unless you're really looking at Aramco closely. So it has a large strategically integrated global downstream business. I don't know too much about it, but things like refining, petrochemical manufacturing, supply and trading, distribution, power generation, base oils, lubricants, retail distribution, retail operation. And interestingly, the company's downstream businesses, all these businesses, are the largest customer for the upstream business, the crude oil production piece. And these consume around 38% or so of whatever is produced upstream. So there's a huge domestic focus too. Right now, they're focusing on their domestic downstream investments, but also going international in high growth areas in China, in India, in Southeast Asia, in Japan, in South Korea. They also have an integrated petrochemicals business. That's the downstream segment. And if you've been following the news, you'll see a press release that is going to acquire 70% equity interest in SABIC next year from the Public Investment Fund. It's also evaluating large-scale investment opportunities in high-growth geographies. Also a lot of organic initiatives to improve operational and financial performance of its downstream assets. Looking at my notes, there are many initiatives afoot for increasing capacity, for asset upgrades, for improvements in product yield, and capturing additional petrochemical integration. It's been on an acquisition spree and has acquired a 17% equity interest in Hyundai Oil Bank, that's Korea, I guess, and is expanding in India with Mukesh Ambani's Reliance Industries. The government has been a huge supporter, naturally, and the government has made changes to the fiscal regime under which Aramco operates. I'll skip the details because it's a bit complicated, but essentially it's things like compensating Aramco for the gas it sells domestically at subsidized rates, reducing the royalty rate, compensating the firm for carrying costs that are associated with maintaining government mandated petroleum product reserves. The government has also reduced the tax rate for the company's downstream activities and has extended the period for which the company will not be obligated to pay royalties on certain things like condensate production, etc., etc. So it's very favorably positioned. some of its competitive strengths, there are three that I thought in the upstream, the downstream, and as a corporate entity. Firstly, its upstream competitive strengths come from naturally the huge scale of crude oil production. Its conventional proven reserves, the numbers that I just told you, very long reserves life, very long-term track record of low-cost reserves replacement. And it has a very unique ability, honed through excellent management, to capture value through active management of pretty much the world's largest conventional, proven, known hydrocarbons reserves base. Another strength is its unique operational flexibility to respond to changes in supply and demand, that margin that I said it keeps. It also produces multiple crude grades that creates resilience and has global crude oil delivery points. It's also got a lot of high quality gas reserves, and it has exclusive access to a large and growing domestic marketplace. So all of this crude oil extraction with very low average carbon intensity, very low lifting costs, very moderate capital expenditures needed per barrel of oil, etc. So all of these are great competitive strengths for the upstream exploration production piece of its business. And the second piece is the downstream activities that it's honing up. So it has the ability to monetize the upstream production into a high quality customer base. It has a very captive downstream system. It has a strong track record of supply reliability. Naturally, when the upstream and the downstream are integrated, the downstream, as I said, is the largest customer for the company's upstream production. It is the fourth largest integrated refiner in the world. It supplies high value oil, petroleum products to the kingdom, and of course internationally and in large and high growth markets. Some other points that I thought were relevant as it has huge refining scale and complexity, and it has a lot of enhanced integration, upstream, downstream, international. And of course, the core corporate company competitive strengths are reflected in higher operating cash flow than its competitors, lots of free cash flow, good EBITDA. In fact, it's much ahead of the five major international oil companies that people say are its competitors. Very low gearing, and has the ability to execute some of the world's largest upstream and downstream capital projects. That's an important thing in this industry. Naturally, any business of this size comes with risks, and some of the risks are its profitability will be impacted by international crude oil supply and demand and the price at which it is able to sell, because it exports a substantial portion of its crude oil, refined products to customers. These days mostly in Asia. So if Asia slows down, you have adverse economic or political developments in Asia, that's going to impact the company. The other thing is, in this business, it's very hard to get your estimates of proved hydrocarbon reserves right. So there are lots of interpretations, assumptions, a lot of judgment that goes into arriving at that number. So if those assumptions don't play out, this will affect the estimated quantity and value of the company's proven reserves. But these numbers are in like billions and billions of dollars and barrels. So I don't think the margin is going to matter too much. But of course, the company is subject to operational risks. Its ability to achieve its strategic growth objectives, how are they able to successfully deliver their current and future roster of projects. They're going to acquire a bunch of companies, including SABIC. So the synergies, if they're able to unlock that, I mean, standard stuff, I guess, yeah. But it's also exposed to risks related to operating in several other countries. And then, of course, there are other risks, security risks. We saw something happen last year, but they tided over that extremely well. And the government determines the kingdom's maximum level of crude oil production. So since the Kingdom of Saudi Arabia's public finances are highly connected to the hydrocarbon industry, that's going to have some influence in its future direction. These days, there's a lot of stuff about climate change concerns. Maybe this could impact and reduce global demand for hydrocarbons in the long term. And of course, as I said, there are other issues because it's in the Middle East after all. Political and social instability, armed conflict, things like that these are geopolitical risks that any company in that line of work, I guess, faces. Then there are other things like government might influence the core business, regulatory changes, that equalization, compensation Aramco receives from the government. Some of these things they may change, but I don't really think those are issues that really stand out and hit you in the head. But who knows? The company is also required to consolidate its downstream business under the control of one or more separate or even its own subsidiary within a certain period of time, because, as I said, they receive preferential tax treatment. So their general corporate tax rate will depend a little bit on the company's ability to execute on its downstream businesses. Okay, so the other thing, yes, before I miss is this is going to be traded on the local Saudi exchange, and it'll be traded in Saudi riyals. So the exchange limits on share price movements certainly are going to be a good stabilizer, around 10% per day. This will apply to the trading of Aramco shares. But one of the issues is the inability of foreign investors to exchange Saudi riyal for other currencies, since it's traded in the local currency, could have a material adverse effect on demand and trading price of its shares. But I guess those are things that can be managed. Overall, my take is it has excellent prospects. Global demand for crude oil is expected to continue growing. It's very closely tied to global GDP. That's going to be a key driver. And remember, we are talking about years and years, 20, 30 years in this business. So there's a lot of non-OECD Asia growth where we're expecting real GDP to grow at 5-6% until 2030. So this is going to mitigate any reduction in demand for crude oil that can be caused by this trend towards alternative energy sources, greater energy efficiency, the emergence of new technologies in energy consumer markets, things like electric vehicle and the global demand for refined products, chemicals, all of these, ethylene, all of these things can help ameliorate some of the depressants in the adoption of oil and hydrocarbon. So even within the kingdom, the demand for natural gas is going to grow because of an increase in the demand from the power generation sector, from refining, from the industrial sectors. So I am pretty optimistic that one would expect cornerstone investors, sovereign wealth funds, local investors, folks to rally around this and invest in the IPO. The IPO is really part of MBS's plan for Aramco's flotation to support his vision, his 2030 objective of moving the country away from reliance on oil, opening its doors internationally, etc., etc. So this is a summary of Aramco, and I wish that IPO every success. Thank you for listening in. Bye-bye.